let's also welcome on board Mr. Sudeep Bandyopadhyay, the Group Chairman at IndiTrade Capital. And Sudeep, hi, good afternoon. Thanks so much for joining us. Always a pleasure chatting with you. Give us your read-through of the market move that we've seen today, given that, yes, the copper tariff news has, hunted the metal pack slightly, but on the pharma front, we have come out completely unscathed, if you could call it that. What is your read-through when it comes to both of these sectors?
A couple of things. I think nothing is happening in the market for the last 7-10 days, and it's really a wait and watch kind of a mood for the market. Look, first quarter results are not likely to be anything scorching or anything great. So market is not expecting anything. But the tariff related uncertainty lingers. We've been hearing every day that some announcement or the other is going to come, but nothing concrete has come yet. So it's a wait and watch mode for overall the market. Specific segment, sector, or companies related news flow which is hitting the market is leading to some reaction. As you rightly said, copper related news and as well as pharma related news flow is keeping these counters excited. As far as pharma is concerned, I think there is significant opportunity for Indian pharma, and nobody denies that. The tariff-related uncertainty, to an extent, I think, even I always have been maintaining that that's overdone, because US cannot afford to put huge tariff on Indian pharma, because that will, kind of create significant problems for US consumers. And that's the reason why probably we will not see a major burden on Indian pharma eventually. There will be a lot of talk, there will be a lot of volatility, but I think Indian pharma will not get significantly impacted by tariffs. And that's pretty much what the market is cheering and market is getting excited about. Metals, on the other hand, are susceptible to these kind of vagaries of tariff imposition, and copper, we have seen what is happening. So we have to be a little careful. Metals look good, but you need to be a little aggressive investor to take position in metals at this stage.
All right, so that's the take coming in on the tariff announcement. But we did speak to a whole host of experts on what this could really mean for the overall sector, especially with respect to the pharma. We have the takes coming in from Marco Papik, who of BCA Research, and even Peter McGuire shared his take. And also on the tariff on the copper prices, we had a word coming in from Anindya Banerjee of Kotak Securities. So let's go across and listen into them.
Pharma does make sense. Why? Because clearly American pharmaceutical corporations, this isn't really foreign, it's American, they've all basically moved to Ireland. And so Ireland has this very interesting situation where it's basically the 5th largest trade surplus with the US. Tiny Ireland, bigger than Canada's trade balance with the US. That is purely a product of tax sheltering by American corporates in Ireland. So I do expect that to definitely happen. I think that's going to be terrible for the US pharmaceutical companies. It's going to be negative for Ireland, but is it really going to redraw global supply chains? I don't think so. So by targeting pharma, President Trump does go after a specific sector that is sticking out like a sore thumb, and ultimately is going to hurt one country and American pharma sector. So it's not really something that I think is a macro event. It's more of a sectoral play in the US, and you should definitely be underweight US pharmaceuticals because of this.
Increasing these tariffs to from a revenue standpoint. So he's got one agenda, and that is to raise revenue for America. And that's the lens that he looks through, and Howard Lutnick. As far as the suppliers, this is going to have some impact, naturally, one, to the consumer, and secondly, whether they take on board those additional costs as far as tariffs, and they absorb them. And that's something that I think any CEO or CFO has got to work through at the moment. Are they going to be competitive if they don't add those to their product, or if they do add it to the product? But the overall theme is going to be, I think, higher prices. And that's going to be, I want to see how the LME trades over the next probably 2 sessions, currently at about 97, 9,800 a metric ton, whether it's going to crack, 10.5 or 11,000. So we've just got to work through this and see the impact it's going to be, I think, appreciated from the LME and naturally on the COMEX futures.
Something interesting was happening in the copper market, that LME and SHFE, the Shanghai market, was actually bleeding copper out of their warehouses, and all the copper was accumulating in COMEX. So traders were actually anticipating such a move. But this is primarily a tariff play, which is going to create what it has done is actually the American copper prices are going to be at a substantial premium to what the copper prices are internationally. As far as the Indian market is concerned, if I take MCX as a reference point, of course, it won't be as pricey as where the COMEX is trading, but it will definitely tick higher because a lot of the copper is going to get sucked into the US market. What will be the impact on the end user demand? See, for America, it has to have a negative impact. It can have eventually a negative impact on demand. So yeah, it was anticipated. So the reaction as far as today is concerned, we might see an upside in copper prices, which we are seeing in Asia, but it's not going to be something dramatic.
Okay, that's a word coming in from a bunch of our experts on what the tariffs could mean for Indian pharma and copper as well as the American pharma industry as well. But Sharon, give us a chart check on some of the names that you are liking from the pharma pack, because at least fundamentally, despite such a big news flow, even though it is 12 to 18 months down the line, the pharma that the tariffs that we're talking about on pharma, the sector has come out largely unscathed of this entire news flow. What are you liking from the pharma pack right now?
So, Sneh, I think first I'll tell you, when President Trump was elected, the first thing he said, he wants to reduce Americans' medical bills, and that includes medicines also. So, I think this is this 12 to 18 month will, I think, extend to 36 to 48 month till his term ends, and I don't see any tariffs coming in the pharma sector. But it only increase the pressure for American citizens. And if you see, even after this news, stocks like Loris Lab has just made an all-time high today. And stock specifically which I'm liking is Natco Pharma. From lower levels, I think it's given a nice consolidation breakout and now resisting its 200-day EMA. I think once it gives a breakout about 1020 odd levels, you can see sharp movements towards 1050 to 1100 levels. So in this space particularly, I like Natco Pharma. If someone wants to make an entry, I think they can today with a stop loss of around 960 on a daily closing basis. Again, target would be 1100 to 1150 levels.
All right, so that's the call coming in on the pharma, as well as one of the stocks that Sharad highlighted was Natco Pharma. Let's watch out for that. But Sudeep, within autos, do you like two-wheeler counters at this point in time? Because we have seen a lot of these majors have already corrected anywhere between 30 to 50%. While if we see the segment-wise performance, two-wheelers is still performing better versus what we have seen for passenger vehicle, commercial vehicle as well. So help us with your take on the two-wheeler pack, and especially some of these beaten down names like Hero MotoCorp as well as Bajaj Auto.
Well, I think, there is an expectation that Hero as particularly will keep doing well or start doing well over the next few months. The monsoon is good. Rural income is stable. Rural consumption is picking up. And that should give Hero a boost, which has got the best presence in the hinterland and got the right models for the hinterland as well. So I think Hero one can look at. But by and large, if somebody has to play this auto theme and even two-wheeler, I would say look at the the ABS companies. There the regulation has changed, and which gives a great opportunity for the ABS guys. Endurance Tech, the auto ancillary which manufactured automatic braking system, can definitely be looked at. And I would say the auto ancillary is a better bet to kind of work on rather than auto companies overall for the sector, not only for two-wheelers.
Okay, so that's the take coming in on the entire auto space. Let's just focus and talk about earnings now, because earnings season is just going to kickstart tomorrow. We'll also try and get you an IT a poll, especially TCS, on what we can expect tomorrow. But coming this week, you also have Avenue Supermarts, that's D-Mart, that's going to be coming out with their numbers. Surprisingly, this time, the company is coming out with its numbers on Friday. That's a little bit of a change from the usual first Saturday of the earnings seasons that the D-Mart comes out with with its quarter numbers. But let's take a look at what we can expect from DMart's quarterly numbers this time around. Now remember, when the company's update did come, it was slightly mixed to weak. The stock did not do all that well when the company's update did come out. But here's what we can expect when it comes to DMart's quarter one numbers. Based on the update that was provided by the company, we're expecting the standalone revenue to come around 15,932 crores, which is an uptick of 16.2% year on year. Now consensus estimates are pegging EBITDA at 1,348 crores, an uptick of about 10.5% year on year. Net profit is seen at 874 crores, which is an uptick of 7.5% on a year on year basis. And based on the EBITDA that we are estimating and the revenue that the company has provided, we're expecting the margins to be around that 8.3 to 8.4 mark, compared to 8.9% on a year-on-year basis. So that's a slip of about 0.5% on a year-on-year basis. Now the company, remember, has added 9 stores in quarter one. The total store count now stands at 424. But here's why we're expecting the margins to be under pressure. It's because of continued high wage cost and weak sales per square feet. This is going to be weighing on margins. For the like-to-like growth or the same-store sales growth, we can expect mid to high single-digit numbers to come over here. So important factors to watch out for when the numbers do come out is going to be the triple SG rate, outlook on general merchandise and apparel, any commentary on impact of e-commerce and quick commerce on the retail setup of the business, and store expansion plans for FY26 are going to be key to watch out for. So we're expecting a mixed set of numbers coming in for DMart this time around, and I say mixed because the update was not so good when the company provided that, but that has been the quarterly trend recently. So let's see what the stock does when the numbers do come out. But Kunal, Avenue Supermarts on the charts, how is it shaping up to be like right now?
I think it's an excellent chart. I remember, I think there was a point where Avenue Supermarts was beaten down from, I think, 5,000 to almost 3,600 or 3,750 thereabouts. I think it was almost like 3-4 months back. And then post that, I think we've seen that the stock has made a very good comeback. It's come back above its longer term average. It's come back above its 200 DMA, 50 DMA. We've seen a golden crossover also shaping up for DMart. So I think this propensity of the stock to try and make a comeback after being beaten down very sharply. There have been posts that also corrections of 200 to 400 points for DMart, but every time the stock goes into that corrective phase, post that we see the stock going to recovery. Now interestingly, even in the last, I think, 4-5 days also, we've seen the stock correcting from 44-4500 to now sub 4200 mark, which means that if you expect the current behavior to sustain for the stock price, there could be a very high possibility that the stock may make a very strong comeback going forward. 4500 to 4600 is where I would peg the first target for DMart over the very near term.
All right, so that's the take coming in on DMart. Let's watch out for that. The stock has been showing some up move of late. But Sudeep, the other sector that is in focus is actually the whole capital market theme, and especially the exchange related counters. Sudeep, we know that the news flow around what happened to Jane Street, it's likely to impact the volumes. The stock did tank, but there were some other reports as well. But given the up move, do you believe that the valuations are justified for some of these exchange related stocks at this point in time, or you believe that there's more headroom for growth and hence the valuation uptick can still be at play?
Well, I think, a stock like a BSE, I think does definitely get impacted by the action which SEBI took on Jane Street because they had significant volume coming through BSE. And similarly, I'm sure the other large hedge funds also. So BSE definitely got impacted, and that got reflected in the share price of BSE in the market as well. It's kind of recovered, but I would still say that there are a lot of things which are being talked about by the regulator to kind of contain this unbridled speculation in the F&O market. And we'll have to better wait and watch before you take a plunge into BSE. Look, the valuation is not cheap. Even after the correction, the valuation is rich. So one has to be a little careful here. Whereas in case of CDSL, I would say the opportunity continues to remain, and the correction was actually an opportunity for further accumulation. Even now, I think CDSL from a long-term perspective does look good. They don't get impacted so much by the F&O and derivative-related regulations and curtailments, if at all they do come at some stage. So CDSL can be looked at. Amongst the exchange players, I think we do like MCX. A lot of interesting things are happening under the radar there. Electricity contracts are getting launched. I'm not saying that will be a big volume generator immediately, but a lot of interesting things and new things are happening in MCX. And valuation-wise also, I think that does look appealing at this stage.
So that is where Sudeep is placing his bets amid the whole capital market space. But time now to get in some BTST ideas from our technical experts. Kunal, you go first. What's looking good?
So the first one is a container corporation buy. That's a chart which is looking attractive now on the verge of a breakout. So we'll look out for 640 as a target for Concor, and stop loss could be kept at 600. VIP Industries is the stock which is given a flag pattern breakout, trading above the 200 DMA and taking good support at those averages over the last, I think, 2-3 weeks. So we'll look out for 450 as a target, stop loss at 430.
Right, so that's a buy call coming in on Concord. Just yesterday, the company did come out with its business update, and they have shown double-digit growth on their total volumes in Q1. And the other buy call is coming in on VIP Industries. With Sharan, what about you? Which are your BTST ideas?
So I've just selected one today, Shishti. I like the PSU and the banking space again. I think it'll again outperform Nifty going ahead. So you can buy Indian Bank. It has shown good support of its 20-day moving average, and I think it can reverse and retrace to its recent swing high. So you can buy Indian Bank at current levels with a very small stop loss of 630 on a daily closing basis. Your target can be 650 to 660. And I think if it gives a good breakout around 660 levels, you can still see higher levels or around 680 to 690 levels also.
Okay, so that's where Sharan is placing his BTST idea. Indian Bank is the stock that he is liking. But let's revisit the big data point that we received halfway through the trading session. In fact, quite early in the day today, and that has been the AMFI data for the month of June that we got. SIP inflows touched an all-time high of 27,270 crores thereabouts. My colleague Sharad is here with all the highlights of the AMFI data that we've seen this morning and the SIP data. Sharad.
Well, a very strong AMFI numbers coming in for the month of June, and the first time itself the number has gone past the 27,000 crore mark, indicating a strong retail participation in the markets despite the volatility we have seen over the last 3 to 4 odd months. Now, interestingly, the equity inflow that has come in at 2-month high levels as well. Last month it was below 20,000 crore mark, and now it's back to the average of almost 24,000 to 28,000 crores, which we have seen over the last 6 months. Interestingly, the inflows, be it the large cap, be it the mid cap, be it the small cap, all are roaring in. Between 30 to 35% month-on-month jump has also been there. Except ELS scheme, all the equity schemes have shown inflows, and this is the 52nd straight month where we are seeing equity inflows coming in strong. Also, apart from this, if you look at it, the debt numbers have also been decent, but the most important number to look out is the SIP number. It's at a record level of 27,000 crore odd rupees. So that's a very strong indication coming in the markets, especially regarding the AMC stocks as well as the mutual fund data. And overall, the sentiment is back.
All right, thank you so much, Sharath, for all those details. But let's have a look at some of the other movers which are really heading for a strong closing for themselves. Like Kunal highlighted, the logistics space is doing well. Concor is one, but the other stock is actually delivering. We did discuss about this stock just yesterday, where the stock was on the verge of making a breakout. The stock is holding on to the gains of over 2.5%. Even ICICI Prudential, this stock has been on the up move for quite some days now. That stock is also up 2.5%. Nykaa, after that block deal, 4.5% uptake is what we are seeing, and along with that, RBL Bank and Chola Investment Finance, these are your other movers. But the other pocket that is doing very well today is actually the whole diagnostic pack. And Kunal, one such stock within that pack is actually Thyrocare. If you can help us with a chart check on this one, because I think it's the second or the third straight day of gain. But what does it mean? Good for an up move, or should hold on to these levels?
See, frankly, it's a low traded counter. I think when you look at the charts, the average volumes are just about some 15,000 to 1 lakh on an average for the stock price. But then given that kind of a volume, the chart patterns are looking attractive because the stock is coming at almost like a 2.5 year kind of a breakout in terms of a swing high. So the previous resistance over the last 3 quarters for Thyrocare was around 1,050, 1,060, where for the last 9 months or so, the stock had taken a resistance, and that resistance has now been broken for the stock price. Now, eventually, if volumes start to build up, because at the cusp of a fresh breakout, we generally expect that traders, they try to position themselves in anticipation that momentum would kick back again to the stock price. So I think over the next couple of days, what matters over here is that if volumes start to perk up higher for Thyrocare, then we could be looking at a major upside for the stock price. Otherwise, the breakout would fizzle out and the stock would come back into the trading range. So I think eventually what we need to watch out for is two important support points. One, I think is closer to 1000 mark for Thyrocare, which has been the starting point of this breakout for the current quarter for the stock price. And on the upside, I think closer to 1150 could be another second breakout point, which I believe if the stock crosses those levels, you might see an influx of good volumes.
Okay, so that's Kunal's take on Thyrocare, but Kunal, I'm going to come back to you because another stock that's doing very well from the entire Nifty 200 universe of stocks, and the top gainer over there is Nykaa today. Nykaa has had another 1.25 million shares traded in a block. Remember, block deals is something that we've seen in Nykaa lately. But other than that, Kunal, I remember about 2 weeks or so ago during our Chartbuster segment, you had flagged out Nykaa. That's a stock that you liked, and now the stock is doing well indeed. Do you believe that there is a further upside to the stock on the charts?
I strongly believe so. In fact, I'd also pointed out that close to this 205, 210 range is a massive resistance zone for Nykaa, where the stock has taken resistance almost multiple times. I think 7-8 times over the last few months. And today it seems like the stock has managed to surpass the higher end of this resistance band, above the 210 levels. So currently the stock is at 213 to 214 mark. So that I believe could be a first signal that the stock is getting ready for a breakout. And that's what I was talking of earlier when I was discussing Thyrocare, that if volumes start to push up higher into stock prices at the verge when the stock comes out of a resistance breakout, that's typically a sign that we expect the price volume to be a lot more synchronized and the trend to start off on the upside. So bullish on Nykaa, maintain that stance which I'd given a few weeks back, and on the upside I would now peg the targets closer to 250 for the stock potentially in the next 1 to 3 months.
All right, so that's the take coming in on Nykaa. Very strong move is what we are seeing in today's trading session. But actually, we have also seen strong moves on Vedanta as well. The stock was indeed in focus as there was a report from Viceroy calling some allegations on the group, and Vedanta has actually called the report malicious and baseless as of now, and they say that malicious combination of selective misinformation and baseless allegations have been there in this report, and a mild recovery is what we are seeing on the stock price as well after this clarification kick in. But Sudeep, just wanted to have your take on this this counter, as well as what's your overall take on such reports coming in, and how as a group can Vedanta deal with it, because it was not just Vedanta, even Hindustan Zinc was hammered in today's trading session.
And might I just add on to that, Sudeep, what do you feel about the timing of this report given Vedanta's AGM is tomorrow?
Well, when you see this kind of coincidence, you start thinking that there must be something behind all this and something beyond what really you can see on the face of it. So I think that's pretty much what you can conclude. But having said that, coming back to Vedanta specifically, I think it's a good counter to be in, and I have been recommending Vedanta for last 6 months. Couple of things very clearly, and none of these have changed. One is they are major players in most of the metals and mining counters, mining in India. Look at their basket of products which they are involved in. I think it's quite commendable considering the global metals scenario is hotting up. Leave aside the tariff-related confusion and day-to-day volatility. By and large, the metals are doing well, and they are expected to do well. Domestic demand is also strong. So metal definitely is in for a good run for the next, let's say, 3 to 5 years. Under the circumstances, Vedanta will do well. Now, also what is happening is major value unlocking opportunity is coming in Vedanta. The demerger, which they had announced quite some time back, it's got delayed a bit, but I think within the next 1.5 quarters, the demerger will be through, and there will be 4 companies. So there'll be strong value unlocking opportunity for the shareholders who get into Vedanta even now. So, getting into Vedanta, buying into Vedanta, remaining invested in Vedanta is a good thought, I would say. As far as Hindustan Zinc, again, that's one of my favorite. I think, the kind of capacity expansion they are doing is significant. And with that capacity expansion, the way the demand for their zinc and silver is going up, I think the company is in for good time. They have been running the operations efficiently. Dividend payouts have been great, maybe for the purpose of taking care of Vedanta's or the promoters' requirements, but nonetheless, the shareholders do get the dividend. So even Hindustan Zinc fundamentally does look good. Leave aside the reports and day-to-day volatility.
Okay, so that's the take on the entire trouble that we've seen with Vedanta today and the clarification that came in from the company. A couple of minutes left till we start winding down, and Sharan, we'll get your sense on where you see the market to open tomorrow. And we said this yesterday as well, and we'll say it again today. Barring any nifty, any tariff news coming in, given that we don't get anything tonight, where do you see us trading tomorrow?
So Sneh, again, a very flat opening expected. It will be very stock specific. Don't expect Nifty to move up or down a lot. There are not too many good news or bad news. A tariff can be a very good news. Again, TCS results are there tomorrow, so it will give a trend to the whole IT index. Maybe that can be our trend going forward. But for opening, I expect around 24,450 to 24,430 odd levels, and on the upside maximum till 25,500 odd levels.
All right, so that's the take on the index. Sometimes no bad news is also good news, so let's watch out for that, what's actually in store. But Kunal, your views coming tomorrow, any levels that you wish to highlight?
Nothing major in terms of level. The only distinctive point today which we are observing on the charts is that the premium for the index futures has dropped down by around 16 to 20 points. So that could probably be a first-hand indication that maybe the market participants are just about trimming off some long positions before being positioned with respect to the news for surrounding.
Okay, and Kunal, what about Nifty Bank? Where do you see Nifty Bank tomorrow? Because it's been under pressure slightly today as well.
Yeah, so as I flagged off earlier, I think Kotak Bank is something which looks attractive. HDFC Bank has come back about 2000 mark. So when you have a couple of leading private sector banking names which are showing signs of strength, I would actually expect the bank to do well for itself. So my expectation for the banking index is 57,500, so over the next couple of days.
Right, so that's the take coming in on the Nifty Bank Index as well. But with this, I would like to thank you, Sudeep, Sharan, as well as Kunal, for taking the time out and speaking with us this afternoon. Thank you so much for that.